Hello, this is Chuck Carvell. I'm the Chuck in the Markets Up Chuck, and today's blog is titled Have a Heart Too. And earlier this week, Monday, actually, I did a blog called Have a Heart where I featured Medtronics. And I want you to notice that the Weekday Trader section of Barron's Magazine had an article on St. Jude Medical saying St. Jude is no hopeless cause, and they're talking about St. Jude's from a standpoint of whether it's undervalued or not. And we're going to use our fundamental research analyzer tool and see whether it stacks up to the Barron's article. So here's our fundamental research analyzer tool, and I'm looking at St. Jude Medical's earnings going back to 1996. And I want you to notice there was in the early years here, earnings were down a little bit. There was actually quite a drop in earnings. Then it was followed by a decent recovery period. And then as earnings began to build here, in the 90s into the 2000s, I want you to notice that where the stock price would be expected to follow earnings, it got disconnected here. St. Jude's stock price actually was quite overvalued during this period of time. And then, of course, it started to come back during 2006, where we had a down year, and it rectified itself. Then earnings grew again, and the stock price rallied. Then, of course, we hit the recession, and the stock price collapsed. But, I want you to notice that St. Jude did pretty well here. But when you look at this, it started slightly overvalued if you consider the green line the value line, and ended slightly undervalued. So St. Jude generated a 12.6% growth rate. What you notice, it has very little debt on the balance sheet. And end up generating a 9.1% rate of return during this period since January 31st, 96, versus the stock market that did 4% during that same roughly 14, almost 15-year period. So, St. Jude did better than the market, and it was really a story of there was a time when it was overvalued, and of course it became undervalued. Now, I also want to point out that if you look at St. Jude Medical from a different perspective here, if you look at it from just during this period of overvaluation, I want you to notice a couple of things. Number one is, for the last 5 years, basically, St. Jude Medical, remember my charts always have, 4 years of history, the current year we're in, and 1 year of forecasting. So, when I'm looking at this chart, I want you to notice that St. Jude should have been trading at around 19, but it actually started this period at around almost $42 a share. And notice the effect that valuation had on shareholder returns. Stock price was really flat, and of course there was that recession, and then more recently the stock has been trading in line with its earnings growth, which has averaged around 14%. If you look at the return of St. Jude Medical during this period, it actually underperformed the market, but very similar because the market was suffering from overvaluation also. But I also want to focus now on forecasting. Consensus of the leading analysts that are following this company as reporting the first call are looking for a 13% growth rate. And if you, give the fact that with 13% growth that St. Jude would sell normally at around a 15 multiple, I've kind of just simply done a calculation here that plots that out, which makes St. Jude a very attractive investment for such a high-quality company going forward, assuming that all this pans out. But as always, you need to do your own research. But I did want to make a point that valuation is critical, even for the best-run companies with good operating results. If the stock is overvalued, the returns can be horrible. Of course, the flip side is true also. If valuation is in line, then future returns can be very attractive. And of course, if the stock is undervalued, they can even be enhanced. But again, you got to do your own homework to figure that out. This is Chuck Carvell saying thanks for listening, and talk to you again tomorrow.